In this video, we are going to be talking about Mullen, ticker MULN. So we have done two analyses on this in about the last 2 weeks, but people keep wanting to see updated levels. So on the longer term, again, they won't really change that much, but after we will go into the shorter term timeframes. So quickly, we will just note the key levels on the longer terms. So $1.03, $1.45, and $1.70 are really the only ones we need to pay any sort of attention to, because from there the next one's $2.50, and the likelihood of getting to $2.50 anytime soon, not all that much, considering that is a 500% move from where we currently are. I mean, even getting to the dollar will be an achievement within itself. That still requires a 100% push just from where we are now. So if though we do continue up, these would be the key resistance levels we're focusing on. So if you were long, areas we would definitely be looking to lock in profits and at a minimum move our stops. But also if you are a short bias trader or you're looking to trade the stock short, these are levels we would definitely look to do it. Off these levels you would expect a minimum of a pullback, usually around 5%, but it could also be that reversal point. Obviously we never know which one a reversal point is going to be, because this stock could keep going to our next and next levels. So we can never say that will be the reversal level. The only thing we can ever say is if we were to push all the way to $7.67, that is a very high probable reversal zone if we went that high, but again very far from where we are now. So really you just have to do your own entries. These are the levels that you want to be paying attention to, but obviously you have to have your own entry and exit and stops really as entry requirements, but definitely levels we'll be paying attention to. So now quickly we will knock it down to a 20-day and a 30-day chart, just so we can give you more basically recent focused levels. So if you're looking to trade to the end of this week or early next week, these levels will most likely hold up still quite well. So if we do continue to the upside, levels we have already hit is going to be the 57 and the 65 and the 67 cents. Those are going to be those key levels. Now 67 is going to be the key one, just because we have broken the 57 and we have broken the 65 already, or at least tapped them. We can see in this case the 65 was that current reversal zone. But if we do make another push to the upside, be paying attention to 67, 68 cents, because that could be the peak. But again, the way to use these levels is, even if you're not a short bias trader, they're just good guidance levels to not be holding the stock long past that level, because then you are paying a very big premium for the shares, and also it's very risk. And obviously we know shares go up slower than they fall, so if it goes above that level, you will probably start creeping up if it did continue up. But when you suddenly get that shock, it will just wipe to the downside. I mean, even here I guess it's kind of a good example of what we mean. Look how many candles it took just to get to this 65 cents. And then within 2 candles you've given back all those gains. And that's why it's so key. I mean, that's why a lot of people do short trade, especially on these smaller cap stocks, because it is actually a lot easier to make money shorting these stocks. You just have to know when to start shorting, and that's when we use these levels. Now though, onto the support side, if that's what you're focused on, you want to maybe think this is going to continue in an uptrend, you want to catch the move. So 47 cents has been hit. You can see already a bit of a bounce off this level, but we are struggling on that second deviation at 50 cents. But if we do continue lower, we are then also looking at 42 cents, 37 cents, and really 35 cents as a final level that we'll pay attention to. The only other things we would kind of note is going past here. Obviously, we do have the other levels if you want to pay attention. I mean, 26 cents you can be paying attention to. But really the key focus is if you break past at 26 cents, expect a break of that low. And then if so, that will probably provide some sort of opportunities depending on how you trade these small cap stocks. Anyway, I hope you enjoyed the video. If you did, why not drop a like and subscribe, and check out one of these 2 analysis videos.